Hey guys, welcome back to Reserved Investments on YouTube, and welcome to part 4, the grand finale of my 3,500 subscriber Q&A series. In this particular video, we are going to finally, the 3,500 subscriber Q&A series, of which parts 1, 2, and 3 were already uploaded to YouTube over the last few weeks. So if this content does interest you, please feel free to check them out. And we're also going to help avoid you guys who are watching this and need my help from becoming the next Timmy or the next Timmy Poindexter Jr. You don't want to be a Timmy, you don't want to be a Timmy Poindexter Jr., and you definitely don't want to be a Kimmy. If you are one of the 4 to 5% female viewing audience that I have, instead of being a Timmy, you have to worry about becoming a Kimmy. So this video is to help guide you on your quest into becoming a very astute investor, not only in the antiques and collectibles trade, but also throughout your life. What this channel really is supposed to encompass, guys, and I really want you to feel this. What I'm trying to do is to get you to live your best possible life. In all these Q&A segments, and I went back and watched a lot of my earlier videos, one of the things that really struck me is that not only do I give advice about investing in antiques and collectibles, I give you advice in dating, I give you advice in the financial markets, I give you advice on how to become the best version of yourself. Now, to be fair, one thing about this channel that always fascinates me is the demographics. I have people that watch this video that are in their teenage years, all the way up through their 20s, 30s, 40s. And on the other side of the spectrum, I have people that watch this channel that are in their 50s, 60s, 70s, older than me, that just like the content that I produce and like the fact that I look at the antiques and collectibles trade through the lens of somebody who is educated in economics and finance. So I consider that to be utmost important, that I provide you guys with the best content and the most factual content that I can produce. Also, another interesting development has occurred to me. While I'm doing these videos, I've been able, since I do consulting work in the antiques and collectibles trade as well, interact with a large majority of my viewing audience. It's interesting to me that the average person that comes to me on my consulting work who finds out about me through this channel, believe it or not, they're in two categories. They're either in the group of people that earn less than $50,000 a year, or they're on the high end of the spectrum, meaning a lot of these people are already financially established. They have access to millions of dollars, and they literally make $250,000, $500,000 per year or more. Now, that's quite interesting because before I transitioned to YouTube, a lot of my clients that were coming to me via word of mouth were those particular subset of people that are already extremely financially wealthy. I have done business with a lot of high-end art collectors, coin collectors, traditional antique collectors, wine connoisseurs, watch collectors, and the like. Up until this point, I haven't really had a chance to engage on what people are doing on the low-end spectrum of the trade. And that's not an insult, guys. I don't want you to take it as such. We all have to start somewhere. But it's very interesting to see how the extremely wealthy people invest their money, how they view these markets, in comparison to how some of the people who are just starting out and not yet financially established invest their money in these markets and also in their personal lives. So I am going to do more videos on that. As promised, obviously, I'm not going to reveal any names or any specific data. That's not what I do. Everything is private and confidential when I do consulting, but I think that's going to make for a very fascinating video. So we're going to get right into the questions. First question, Sean, congrats on another milestone. Can you comment about luxury watches? I know Rolex has the brand name recognition, but what about other brand names like Omega, Patek Philippe, and others? It seems like the stainless steel models have a better ROI, which stands for return on investment. Well, I got a great surprise for you. I just finalized filming a video on Rolex luxury timepieces. It's an introductory video, but it's going to premiere on this channel sometime over the next week or so. When that video drops, please watch it. Please let me know your thoughts because I would love to do a follow-up video to that particular content. As you guys are aware, I am a huge Rolex fan. I do own a vintage Rolex Submariner watch. I love it. It sits in a safety deposit box. I've only worn it 3 times. My parents don't even know that I own it, ironically. It is one of my favorite possessions. So I would love to pull that out, do a full video on what to look for if you are buying or collecting either modern era Rolex watches or vintage watches. But rest assured, a video on that market is coming and will be uploaded to YouTube soon. Please watch for it. Thank you. Next question. Sean, what is your opinion on penny stocks? Okay, for the record, I do not like investing in penny stocks. It's too speculative. It is not geared towards long-term investing. Let me give you the best definition on penny stocks that I could find so you understand the risks and what you're looking at. Penny stocks are traditionally defined as securities that trade at less than $5 per share, often in unsupervised over-the-counter markets. Penny stocks can be lucrative if you have the knowledge to play in this market, but they are extremely high-risk investments when compared to high-grade blue-chip stocks. Penny stocks are volatile, often illiquid, and in most cases, subjects to scams. If you ever saw the movie The Wolf of Wall Street, he made his fortune peddling penny stocks by utilizing pump and dump schemes to the masses. That's how he got in trouble. So this market is not for most people. Again, guys, I want to reiterate this. Some of you, especially if you are younger, especially if you are in a financial jam, you're looking at ways to build wealth by cutting corners. There is no easy way to build wealth in a capitalistic society aside from inheriting money or getting extremely lucky. You have to do the work. You got to grind at it. You got to put in the hours. You know, I have people that reach out to me and they tell me, Sean, I make $30,000 a year and I just can't get ahead. And my next question to them is, okay, you make $30,000 a year. How many hours do you work a week? And the majority of these people tell me, Sean, I work 40 hours a week. No offense, I'm here at the age of 44. I'm pretty much financially established. Are you aware, in most cases, I work close to 16 hours a day? I don't work just 40 hours a week. You will never get to the point of where you come close to achieving your goals, of building a business, of working a corporate job, if all you're willing to do is work for 40 hours a week. I don't care if you have a health condition. You know, I brought this up before. I suffer from celiac disease, guys. Celiac disease, yes, to be fair, if you avoid gluten, it can be controlled. But I still have my bad days. I still trudge along. I still have to sometimes go to the doctor and get MRI scans and tests, and they do all this nasty stuff to me. Guess what? At the end of the day, I put a smile on my face. I pay all the wonderful co-pays and everything else that my insurance won't pay, and I get right back into my working environment and I grind at it. You have to have that mentality where nothing is going to stop you. You know, I've said this in the beginning of this video. That's why I started this channel. I want you to be the best that you can be, not only in investing in antiques and collectibles, but also in your personal life, in your dating life, in your professional life. I don't care whether you're watching this video, you're male, or if you're female. I don't care. I want you to be happy and I want you to succeed. That is utmost important to me. As long as you're happy, you're succeeding in life, you're doing all that you can. Avoid penny stocks unless if you have an education in finance, you understand this market, you know how to make money in this market, then tread carefully. That's what I'm going to tell you. Next question, and this kind of ties into this one. Sean, what is your opinion on Forex currency trading? I see many young people on Instagram promoting it like crazy. There's your first red flag. Can Forex really make you wealthy? Well, the answer is yes. So can penny stocks. So can flipping houses. So can utilizing your Amex card to buy collectibles. However, they're high-risk activities if you are not financially established and you don't have the experience to play in those markets. Why do you think I take the time to do videos with Pokemon cards, with Magic the Gathering cards, when you see all these people in one-bedroom apartments calling up distributors going, I would like 2 pallets of the latest Pokemon product, please. And you see them putting out YouTube videos that get 10,000 views where they're telling you guys how to start a Pokemon business from your one-bedroom apartment. If you guys were around in the 1990s, you may remember Don Lapre. Don Lapre was the infomercial king who tried to teach people how to be rich by placing classified ads in newspapers and other periodicals from his one-bedroom apartment. Well, guess what? Where are all these Don Lapre millionaires? Because right now, I see the same thing happening on YouTube. And 20 to 30 years from now, a lot of you guys out there who are engaging in this behavior, you're going to end up hating your life. You cannot build long-term wealth over the long term by putting all your money in speculative assets. And that's what a lot of you want to do, and it's not going to work. So what do I think of Forex currency trading? Well, I'm going to answer this question in an interesting way. I'm going to tell you the risks of going into this market. There's an exchange rate risk, there's an interest rate risk, there's a credit risk, there's a country risk, there's a liquidity risk, there's a leverage risk, there's a transactional risk, and there's also a risk of ruin. So if you don't understand what I'm talking about by just stating all those different risks, you are not ready to start trading on Forex. Please tread cautiously. Now, if you tell me, Sean, I've been reading books on this. Sean, I have a degree in finance. Sean, I just want to try it and see what happens. By all means, limit yourself to your losses by only trying it with maybe $1,000, maybe $2,000, and see how you do. But chances are, you're going to lose your proverbial ass. That's what I'm going to say about Forex. It's no different than options trading. I have all these people who somehow discover the wonderful Reddit thread known as Wall Street Bets. And they come to me and they say, Sean, I want to get into options trading. I feel I can succeed in this market. And my first question to them is, how much of a net worth do you have? You know, most of these people have negative net worths. They come to me where they owe $20,000 in school loans. They have a car payment. They have credit card debt. And they manage to save $5,000. And the first thing they want to do is go trade options. You got to be kidding me. You're never going to build long-term wealth with that mentality. You got to change your mentality, guys. I'm telling you. Next question. Sean, can collectibles such as vintage video games be seen as having intrinsic and extrinsic value? Before I go any further with this question, I'm going to answer it this way. Yes, but we are literally 10 to 20 to 30 years out before we get a definite answer to that question. The market for collectible vintage video games is too speculative at present time. The market is anything but stable. And as a result, we will know decades from now how that market plays out. This is what I'm going to tell you guys. And again, it goes back to the core crux of this video, the point that I'm trying to put forward. I don't have a crystal ball. And even as an expert in the antiques and collectibles trade, I can't look ahead 10, 20, 30 years and tell you what video games are going to be selling for a premium. But what I can assure you, if you go to the market today and you get yourself an S&P 500 index fund, a total stock market index fund, I can pretty much assure to 90% accuracy that in 10, 20, 30 years, the prices of those funds is going to be a lot higher than what it is today. And don't let the news media fool you that, oh my gosh, stocks are overvalued. Look at this. The stock market is at all-time highs. And then I have critics come on this channel in the comment section and they say, look at that guy, Sean. He's putting all of his money in the stock market. First of all, not all my money is in the stock market. Most of my money is in the stock market. I also have money devoted to, obviously, bond funds, bond investments, real estate, and of course, antiques and collectibles, as well as a small position in gold and silver. So I do invest in more than stocks, obviously. I'm in the antiques and collectibles trade. But one thing that I always laugh about is when somebody says, Sean, I hope the stock market loses 50% to teach you a lesson. You know what my response to those people is? I hope it does too, because then I would buy more. Do you know how much money I made during the 2008-2009 stock market crash? Do you know how much money I made just during the Corona crash? Going after financial companies like Bank of America, JP Morgan, Citigroup, Prudential, even oil companies like Occidental Petroleum that dropped to $9 a share. I was buying up shares of stock in all these companies because I know at some point we're going to get through this. The pandemic isn't going to wipe out the human race. And even if it comes close to doing that, the U.S. government is going to bail out the stock market first. I assure you. If you want proof of that, go back to 2008, 2009. They didn't bail out the average person. They bailed out the stock market, the investors, and the political donors and the elites. That's who they bailed out. And I don't care if you're watching this video as a Republican, as a Democrat, as an independent. Hell, I'm a Bernie Sanders supporter. Do you know why a guy like me is a Bernie Sanders supporter? Because I feel bad for the people out there that are so misled by both political parties right now. The Democratic Party is so socialist, and the Republican Party is so free market based. It is insane to the point where I don't think any bills are going to get passed in the near future that are going to benefit the average person. If you're lucky, you may get another stimulus check. You may get some extended unemployment benefits. But overall, I think it's going to be gridlock. And I think a lot of the bills that are going to be passed are going to benefit the corporations and the elite. It's just the economic system and the political culture we have in the year 2020 going into 2021 in the United States. We'll see if I'm wrong. We're going to see how it plays out. You know, a lot of you are either glad that Joe Biden won the election or you're upset. Well, I got news for you. It's really not going to change anything because there's a lot of gridlock in Washington. We as a nation, and I'm talking about the United States, so I apologize to my viewers overseas. But in the United States, we have a very divided populace when it comes to politics. There's a lot of hardcore people on the left, a lot of hardcore people on the right, and you also in the middle have a dominant force of centrists that just want to hold both parties together and go in that direction to the point where nothing is really done policy-wise that helps the poor, the downtrodden, the people that really need the relief. And that's what's tragic in our world today. I've said this once, I'll say it again. The biggest threat to our society, and when I say our society, I don't just mean America, I mean also you countries overseas that utilize capitalism in some form, is wealth inequality. There's a lot of people out there I know that watch my videos, they relate to the content that I produce, and through no fault of their own, they just cannot get ahead. Either they have medical conditions, they could not go to college, they came from a disadvantaged upbringing, and as a result, they understand that it's not going to get better anytime soon. And my heart breaks for those people. I'm going to be 100% honest. That's how I'm going to leave that question. Next question. Sean, how long does a speculative bubble last for? Well, this is a good question, but I'm going to ask you a question in return. How long is a piece of string? In all honesty, a speculative bubble can last anywhere from several months to several years to several decades. There is no fast terminology that defines how long a speculative bubble needs to last. I'm going to give you an example. Beanie Babies. Everybody loves to talk about Beanie Babies. Beanie Babies hit their peak, meaning the bubble started in 1996. All the way up to 2002 was when that bubble finally burst. So Beanie Babies were going strong for 6 long years, guys. Now I know whenever I talk about Pokemon, whenever I talk about Magic the Gathering, whenever I talk about vintage video games, people reach out and they say, Sean, these items are not like Beanie Babies. Well, ironically, I'm going to name another collectible that went through a speculative bubble that lasted for close to a decade or more. Believe it or not, when coin grading hit the coin marketplace in the 1980s, coins went through a massive speculative bubble that lasted about 10 years. At this particular time, Wall Street thought it was a great idea to sell shares or fractional shares of graded coins, antique furniture, and artwork to the average consumer. You know how it ended? Well, the speculative bubble for graded coins popped, first of all. They did not go to zero. They're still a viable collecting commodity. I invest in that market over the long term, full disclosure. But also, what happened was the Merrill Lynch Athena Fund got sued by their investors, and that fund went belly up. You can research that. The speculative bubble in coins that caused that fund to accelerate in value exponentially is also what brought that fund down in the end. That's how that played out. That's why I am very, very critical of all these markets where you have all these social media influencers coming in, showing you their rare Pokemon collection, showing you their Magic the Gathering cards, showing you they're great at video games, and you log on to these collecting forums and you see this guy telling you that guy Sean on reserved investments, he's all wrong. He has $250,000 invested in great at video games, and he's telling you the market is stable. Well, let me ask you this. Do you think that guy, if he's thinking of selling those items, he's going to take the time to call you and go, hey, little Timmy Poindexter Jr., just to let you know, I know that you're trying to invest in great at video games. I'm selling out of my collection right now, and this could fundamentally affect the market, meaning the market could take a hit after these items get sold off if more and more people start selling into the market. I just want you to know that so that you can plan ahead. I guarantee you, none of these market makers, none of these market manipulators have you in the back of their mind when they go to cash out of these collectibles. So be very careful when that happens, because the bubble could potentially start to deflate at that point. It's not going to be fun if everybody starts selling into the market all at once. Now, is it? This is Economics 101, guys. Next question. Sean, I would really like more videos on passive investments and financial investments like stock. You have mentioned several times in previous videos that one of the best investments for the past 10 years has been index-based mutual funds that track either the entire stock market or the S&P 500 market index as a whole. However, more and more sources now claim that next decade may not look like previous ones for the S&P 500. Do you think the stock market is overvalued? And what are you doing in regards to these investments? Are you changing course? The answer is no, I'm not changing course. I answered this earlier in this video. If the market drops 50%, I'll be buying more. I'm getting those particular shares at a sale price at that particular point in time. I'm happy to be invested in these markets long term. That's the point. I'm not speculating in stocks. I'm not speculating in mutual funds. Mutual funds, by their nature, are meant to be a long-term investment. They are not meant to be held for days, months, or even just a few years. These are assets you're supposed to hold for 10, 20, 30, 40, 50 years if you can. That's how wealth is created over the long term, guys. I will tell you, every time the S&P 500 index fund or the total stock market by and large hits a record, the news media goes crazy and says a correction is coming. Oh my gosh, the market's going to drop 10, 20, 30%. Guys, if you're invested for the long term, why do you care? It's going to be a buying opportunity if that happens for you. That's how you make money in these markets long term. Look forward to it. Capitalism is based on a boom and bust business cycle. Supposedly, there's supposed to be a recession every 10 years or so in a capitalistic economy. Now, we've been kind of lucky because due to the Fed propping up the value of a lot of these assets, hint, hint, we haven't seen a recession in quite some time. Even the Corona crash was not really a hardcore recession, I'm sorry to say. And believe me, my heart goes out to the people out there that are affected, who are standing in a bread line right now, who can't get food, who can't go back to their jobs because maybe their job was eliminated. Maybe they are struggling financially. I get that. But overall, there is a disconnect between the overall stock market and the economy as a whole. That's why I am going to state one political thing now that I am 23 minutes into this video. Please do not get mad at me. You guys know I try to put out unbiased content. But I get really pissed off whenever President Trump says, well, the stock market just broke 25,000 points. Oh, it just broke 30,000 points. Again, the stock market does not reflect the overall economy or the plight of the average American by and large. There are a lot of people hurting right now why people like me could be celebrating because we're making fantastic gains in our financial investments. That also ties into my political views, guys. Again, I am a bleeding heart. I care about all citizens. That's what kind of makes me unique. Believe me, I feel that pain, and it upsets me that I can't do more to help those people out. Believe me, I am very frustrated at the system as a result of that. That's all I'm going to say. I am going to take one more question. Sean, What is the meaning behind the necklace and the necklaces and pendants that you do wear? I guess you would consider me a spiritual agnostic. So I do like to wear a lot of pendants that have unique symbols, that have unique meanings. I wear this one a lot. I also wear my Eye of Horus pendant that you guys see in other videos. So those are particular pendants that have a lot of special meaning to me. Even the Eye of Providence that I use on this particular channel as my symbol, and also the symbol for my company, that means a lot to me as well. And that's kind of personal. I'm not going to go into detail on that, at least in this video. Maybe in an upcoming Q&A where I have more time to answer the question, I will. But I just want to let you know that's why. It's just a personal symbol that has meaning to me. That's why I wear them. That's the whole reason. And that concludes the 3,500 subscriber Q&A. Please help control the Timmy population. Have your Timmy Poindexter spayed or neutered, or at least have him watch this content so he doesn't make decisions that he later regrets. Thank you for watching, and have a great day.